Okay, in the interest of brevity, I'm not going to do a big introduction to this panel. It's a terrific panel. We want to spend as much time on this as possible. So the name of the panel is Do the Public Markets Still Matter to Canadian Tech? And our moderator is Mark McQueen from Wellington Financial. So we have a big hand to Mark McQueen from Wellington Financial, please.
You've been missing me. You've been telling people things you should.
I love it. Thanks. Good afternoon, everybody. We will wait until Tony Pullen drags himself away from twisting some investor's arm on the greatest healthcare deal. Thanks, everybody. Some of you know what I'm talking about, eh? Paul Tickler. Our firm has been in the venture debt space since 2000 here in Toronto, and we have offices in San Francisco and Santa Monica, where it was 78 degrees yesterday, I can tell you, so not quite the same as -5 today. Our panel has been brought together to kind of cover all the different, hello, Graham, to bring all different kind of perspectives of private technology, the view of the world. We've got an entrepreneur, we have a venture capitalist, we've got a lawyer in the space, and then we have the person who will take you all public when that day comes from the TSX. I'm going to ask each one of them to give us like a 1-minute overview on themselves and their firm, if that's okay. Rob, I'll start with you.
Sure. I'm Rob Fonn with the law firm of Wildeboer, Dellelce. We're a corporate finance and M&A focused law firm based out of Toronto with offices in Toronto and Waterloo. Our firm is focused on the capital markets, both corporate finance and M&A for public and private entities, and are significantly active in the technology space, among other sectors, for both domestic issuers and international issuers looking to raise capital here, as well as all of the various capital providers who fund early stage to multinational, multi-listed companies.
Hi, I'm John Ruffolo. I'm with OMERS Ventures, the venture capital arm of OMERS.
Ungad, Chadda, Senior Vice President at Toronto Stock Exchange, here today representing the equity side of our business, so that's the TSX Venture Exchange and the Toronto Stock Exchange. Also have colleagues here from our TMX Equity Transfer business and our TMX Equicom Investor Relations business as well.
My name is Mike Edwards. I'm the CEO of LX Ventures. LX Ventures trades on their TSX Venture Exchange under the symbol LXV. We acquire, accelerate, and integrate early stage technology companies. We're based in Vancouver, but we're an international company.
The panel, kind of our headline was meant to be, do the public markets still matter? And I think that is got a bit of a barbell element to it. On the one hand, there have been probably half a decade up until recently when there were really no Canadian IPOs in the technology or healthcare biotech space of any material size. And then that window maybe opened 5 months ago, maybe if I could say that, in terms of the Halogen and Vixis deals. But all the while, maybe in the last 3 years, I'm going to say, John, your firm at OMERS has started to, in conjunction with sometimes U.S. Mega VC firms and sometimes on your own, start to put 20, 60, 80, $100 million into private companies like Shopify and Desire to Learn, and which, of course, in the Canadian context, if a good Canadian tech IPO like WorkBrain or Halogen was a $40 million, maybe a 46 with the green shoe, if a company like Desire to Learn can raise 80 or 100, does that mean the public markets have been kind of obviated and people are going to go, continue to raise money privately? And so let's start. And as somebody who's actually delaying IPOs of probably two of Canada's best private companies, in Shopify and Desire to Learn, is that because the public markets aren't relevant, or is that because you're, as an investor, still trying to build value for some eventual IPO?
Yeah, no, it's a good question, Mark.
It's a tough one too, as the guy who's actually kind of checks, but tell us the truth.
I mean, it was first a strategy that started a little bit by accident, and then we started really thinking about this very question. When I look back at some of the technology companies that did go public in the late 1990s, early 2000s, and subsequently became stranded, one of the observations were that perhaps they were just still too immature from an infrastructure perspective, reporting perspective. The business hadn't really reached a steady state. So part of the strategy really became, if we could replace the proceeds that would be generated from an IPO and call it create the private IPO, where we would invest in 5 cases over the last 2 years. The smallest one being approximately $20 million, but the largest one being Hootsuite, actually $165 million. The idea is keep the company private, and with using a proxy of $100 million of minimum revenue size, and then go public, and doing it right, and try to really establish the steady state to make it a very good product, particularly for the institutions that would typically buy that product. That was really the strategy.
So, Rob, from your vantage point, obviously issuers who would like to go public are coming to you, and you're seeing, on the one hand, these massive private market checks. On the other hand, the Canadian venture capital market has shrunk dramatically in 15 years, obviously. We've gone from $2.5 billion a year going into the private VC market, probably in 2003, to $1.6 billion maybe last year, give or take. I mean, what advice are you giving your clients about knocking on a door like John's versus tapping the public markets for an early round if they had the choice?
Sure. So given the nature of my practice and the fact that my livelihood is inextricably tied to the capital markets, you'll understand the predisposition in my remarks. But certainly, we like to see companies go public, and we're all selfish, on the service provider side from that perspective. But if you're giving your client the advice as to how to raise the capital, if the money's there on the private side, depending on the strings that come along with it, certainly you'd advise to stay private as long as you can, depending on the nature of the business, of course. If you're an aggregator like LX, for example, or an Amaya Gaming, or someone along those lines, like a Constellation, you're not going to be able to do the repetition of deals of the magnitude and the type that John's referring to. Those are once in an organization's history type deals. I could be wrong, but if you need to repeatedly attract capital for various acquisitions or other sources, it's just not a repetitive model for certain issuers. So,
yeah, I mean, you mentioned Constellation. There's a stock that no one's ever heard of. It's gone from $18 to $226 or something today, or $231, all while the market was ignoring it. And other than maybe Q9, and there's a few like that are low profile and have been 10 baggers, I think. In Constellation's case, obviously even more than that. I mean, Mike, as an entrepreneur who obviously chose the public markets to raise capital to finance your growth, how have you found it, and would you recommend it to others in the room who might be thinking about the same thing?
In the right circumstances, absolutely. I think the window is open.
So what are those? Because none of us are always clear.
Yeah. I think that the window is open now. I think that we started this in the summer or the fall of 2012, and it was tough slugging for 9 months. But we saw a definite change in sentiment in the summer of 2013 on both sides. I have more entrepreneurs that are speaking to me about the process. I have more potential issuers that want to discuss tech deals now, and are using me and my team to vet some of those deals and talk about those deals. So I'd say that the appetite is there, and the investors, are proving it. Our stock trades relatively well. I think the investors are out there and want to take a nibble and want to explore this.
No, Ungad, the TSX has done a fantastic job, I think, in the resource industry, being a focal point for early stage companies to find growth capital that otherwise might not have been available in the private markets or maybe flow-throughs. But the tech side, have you been able to transition from the resource sector to the tech sector as the NASDAQ's hitting multi-year, multi-decade highs, and the resource sector obviously has been on its heels?
Yeah, I don't think anyone could say we've made a full transition. We've been working at this for 15 years. We brought with the acquisition of the CDNX, we brought tools across from the west to the east for junior companies like the Capital Pool Company and things like that. And we started to diversify, away from purely resources probably 10 years ago. We continue to do that every day. So I don't think our job's done, but I think you're seeing quite a window here finally open up where people are using the market. And I think if we think back to the last window where the tech companies were using the public market, my sense is the quality is just that much better from what we're seeing. And to your question or your point about these mega private rounds, we think it's a great thing. I mean, whether these companies go public or not, getting more capital into great Canadian companies, it says to me there's confidence. If the VCs have confidence as an investor class, then I think the other investors are going to have confidence as well, even on a delayed IPO that comes out further down the line.
Yeah, I mean, I guess Google and Twitter and Facebook and others are examples of privates who all had VC capital who waited to go public, but even Google's gone from $80 to $1,000 post going public. So the first guys made a bunch of money, and then the next crowd, whether it's retail or institutional, also were able to make money. I mean, John, as someone who's based in Toronto, who's your fiduciary obligation is to the pensioners of the OMERS system, but you're still obviously part of the ecosystem here in Canada, and the TSX is our home field. I mean, what advice would you give to the Hootsuites and Vision Criticals and Desire to Learn and Shopify, those kind of top tier of IPO candidates, about looking at the TSX versus the NASDAQ? I mean, Smart Technologies obviously chose the NASDAQ. Eloqua chose the NASDAQ. Halogen got 5 times revenue here on the TSX and still went up after. So,
Right.
What advice are you giving entrepreneurs when they look at the local market versus international?
Yeah, so this is the advice that I'm personally giving to, we have 5 companies that are in the IPO hopper for 2014/2015. So we're going to be dealing with this issue very, very soon, and we have a joint company that's probably going to be the first one to go
So
out.
for those of you who wonder what that is, you have to go to our 2 websites at Wellington Financial and OMERS and see which logos we have that are in common. There's a
And
couple.
correlate it, and then subscribe to your personal newsletter. I mentioned, the metric of if it's a software company, and all of ours are generally software companies, $100 million of revenue, and getting to the steady state. We use those criterias because I believe that that's a criteria that would make it a successful US-based IPO. So ignoring the border for a moment, look at the significant exchanges in the United States. If it meets that criteria, that's the criteria that we're using. However, my personal view, I would like to see all of ours go jointly on a US base, whether it's NASDAQ or New York, and TSX. The TSX part is important for me personally as well, because I believe the institutional coverage in Canada, it's thirsting for great product. So these are going to be companies that will be, we haven't had $500 million plus IPOs, I don't think, ever in the tech sector. For that to come out, we believe that there will be so much demand for that. And the Canadian institutions are far more forgiving in the event that there is a little bit of loppiness in some of our revenues. So we actually believe it's a great strategy to keep your price stable in the event that there's some fickleness in the U.S. The U.S. part of it keeps the valuation and the liquidity up high enough so that we don't have this big difference between pricing issues as well from both sides of the border. So the preference for me is actually both.
Ungad, there's been the odd international company that's tried to use the TSX to attract capital for an IPO. Some American, some international, whether it's subcontinent or the Middle East. Is that actually, since we don't really have a huge ecosystem here in Canada to provide a deep and broad pipeline for IPOs the next 3 or 4 years, is there a sense that Canadian investors are prepared to look at, as they do with resource companies, mining in Africa and Burkina Faso and elsewhere, to look at technology companies that aren't based in Thornhill or in Burnaby?
I think, to be fair, I mean, obviously it's possible, and we do attract some of those companies. I would say you cannot take the resource sector and just port it over and say that you can be agnostic as to where the company is from. From what we've seen, not that it's a requirement, but having a nexus to Canada, some level, some nexus of Canada, whether it's a major shareholder, a customer base, another relationship, I think might in some instances be the tipping point to get the company, get the whole equation to make sense. But I would say some of the basic things that are still very valuable is you know, the stepping stone into North America. Like TSX does give you, even if you only have a TSX listing, a huge access to the North American market, based on 40% of our trading daily being coming from outside of Canada. And
That's primarily American PMs.
for the most part, probably 2/3 of that, we estimate, of that 40 is coming from the American side. And a lot of people in the room know the types of roadshows we do, even for TSX listed companies. It's not limited to north of the border. So there are a lot of advantages for technology companies. You know, I would guess that the ones that are bigger than the average Canadian one, and the ones that do have a nexus to Canada, are probably going to do a little bit better, would be my guess.
Mike, one of the AIM, the British small cap market, kind of came to Canada 7 years ago, maybe. Is that about right, Rob? And kind of tried to market themselves as an alternative to the Canadian capital markets. Firms like March Networks and Sandvine and Redknee and Redline all went over there, found out it was a financing, but it wasn't actually a liquid market.
Right.
One of the knocks sometimes, and then all came home eventually with their tails between their legs and got rid of the $2 million a year in extra fees they were spending with auditors and lawyers over in England, and everyone was happy. You know, the small cap, micro cap, public markets in Canada sometimes get knocked as a great place for a first round, and then unless there's some huge attention drawn to your company, you're kind of stuck for that next round. What kind of an interest are you finding for that next leg of growth and raising $5 or $10 million or $50 million of capital to go and achieve your goals?
Yeah, absolutely, in Canada. Yeah, so I think that we've been going out and meeting potential partners. The door's open. What used to be a room of one person is now a room of 10, 12,
Potential
13
investors,
people.
you mean?
Yeah, in the groups that we're seeing here in Toronto.
These are in the United States or in here in
Canada.
Toronto?
Yeah, so I think it's really interesting. Like, just anecdotally, you know, I can look at the business cards of the meetings that I took in 2013, and there'd be 2 or 3 people in that meeting, and now there's a room full. So we have 8, 9, 10, 11 people. One meeting was 12 people. So
Is that a function of the NASDAQ or of your own business progress, or
no,
Equicom doing a great job? I mean,
actually, I don't think it
Always.
is. I mean, I'd like to say it's LX Ventures. It's not, because the companies that we're meeting are staffing up. They're increasing their staff. They're
these are
increasing.
the money managers are hiring more technology-focused people to
That's
look at
exactly
firms
right.
like yours.
Yeah, yeah. So I think that that next round of money, that 5 to 25 round of money, I think that's a very good sweet spot in Canada.
One of the things we're going to talk about is the private markets in Canada, despite John's best efforts and his CEO, Michael Nobrega, trying to give Canada some home teams to do these small and large rounds. You know, are the private markets in Canada deep enough in your view, Rob? And if not, why not, do you think?
I think we've done well over the last number of years in the early stage space, and I think what you're seeing over the last year, in particular with OMERS participation and some of the funds out of Montreal, you're seeing at the later stage space some success. There's still a significant gap in the Series A round of financing that companies need, or similar stage, growth stage financing. I think there is capital in the system to do it. I just don't think it's sufficiently organized in a way that makes it readily available for companies of that size to attract in a timely and efficient fashion. And I think there's still an inherent gap in that aspect of the market.
Why don't you think that's been fixed? The government, both provincially in 2008 and federally in 2012, are trying to pull some levers to change that. But why do you think nothing's working yet?
Well, I think there are a few factors. What I've seen in my experience, albeit limited, is the nature of the companies. I think we struggle to find over the last number of years or promote the types of companies that could attract that type of investment. I think we've done a phenomenal job, whether it be in Waterloo, Toronto, Montreal, with Vancouver, with the incubators, with the networks that have been surrounded by or surround those organizations, the service providers, the incentive programs from government to facilitate growth. So I think now we're at a stage where you've got phenomenal young companies that can attract quality capital, and if they can't find it in Canada readily, the US guys are coming up to do it. I'm thinking, along the lines of Thelmic Labs and Vidyard out of Waterloo and some of those companies. So I think we've got a great caliber of company now that can attract that capital. It's how quickly the capital can form and react to it. And you're seeing the great things with the $400 million award of funding that the government recently announced.
This
So-
is the federal government. Yeah.
Yep.
John, I know you're passionate about this topic. Any progress on that front, you think, the last 2 years?
There's going to be an announcement made either this week or next week. The first fund has closed.
What kind of fund? The fund of fund?
Fund of funds, correct. And the second one will follow shortly thereafter. I don't know if they're going to do the exact same day. So 2 of the likely 3 fund of funds.
So these are $250 million firms or 350 or
each one gets $125 million.
from the federal government?
Yes, and then they're supposed to be attracting at a 2-to-1 ratio another $250 million on top of that
From the private sector?
from the private sector. So that will still continue going on, with the third remaining allocation still not yet determined. But the government had decided to get these 2 out and start to get the capital flowing. The challenge, though, of course, is that when you start to still take that capital and ultimately flow it down, the big question that you just asked, will individual funds who ultimately deploy that capital be of sufficient scale to make some of these later stage bets that that Rob's just indicating? The challenge is it's tough unless you have a fund size probably $200 million and above. I don't see very many at that level.
I mean, our firm's at 200 and at 15 million is our kind of max per name. And if you've got 80, you're sure not going to put 15 into a deal, right? And
Correct.
And your firm's, I guess, 200, and you've done some 20s, which is at the high end for people's comfort, but certainly still prudent. But if you had $100 million, you sure wouldn't put a quarter of that into one deal.
Well, we actually raised the second fund. We just didn't announce.
We're getting lots of news here. So we've got 2
Yes,
government
yes.
programs coming the next week, plus
Yes. Yeah,
John's
we
got more
raised-
money than we thought.
I just couldn't bother announcing it. We raised a lot. So some of these, the biggest check that we have written is a multiple of those numbers, and on the Shopify deal, for example. But if you want to play in that space, 2 comments.
In the growth capital space.
In
you
that
mean?
growth capital space, and you need to be prepared at a bare minimum. The smallest check we wrote was $20 million. You really got to play in the 20 to 40 million, maybe 50 million check size range to really.
Through the life cycle of the investment.
Yeah. So so in all of our 5, the single check have all been between $20 and $40 million per check. So multiply that across what size fund that you actually need. It starts to become
like $400 million or $500 million or.
500 million is a good start.
Yeah.
It's probably the right number.
So the private market in the United States for secondary trading of shares for things like Twitter and Facebook became quite popular. Obviously, John's firm is able to do some transactions that provide secondary capital that allow companies, in essence, to stay private longer, so the CEO and the management team or the angel investors get some money off the table and don't need to, quote, go public for that reason. Why has it not yet developed a Canadian private market, do you think? And is the TSX going to help stimulate one? I know you're working hard on things like crowdfunding and all other tools in the ecosystem, but Shares Post, I guess, and Second Market are 2 examples of U.S.-based firms that have actually drawn some attention and seem to have regulatory approval. And is there a chance for that in Canada?
Yeah, there is. We're very close. We stay very close to that file, and we've had discussions with those types of firms over the last few years. We've been very close with the OSC in terms of what they're working on in terms of crowdfunding, but we see an opportunity that's actually broader than that, the whole exempt market and the whole private company capital formation side, including the ability to trade those. So that's something we're looking at very closely. And we're,
in theory, better that it be traded within your umbrella than Rob and I go and create our own little company and try and do something on our own.
Well, it'd clearly be my bias, but
No, but from the regulators, I mean, from everyone's standpoint, from a transparency standpoint, from a governance standpoint, not to take away from the U.S. models, but if it could be under your umbrella, then maybe investors would feel more comfortable in putting $10,000 into a private company's jeans, not knowing who's paying attention.
For sure, that's a solid view, I would say. And as you look at portals and what the requirements will be for these types of portals, I think we come equipped with a strong history and a strong track record of striking the right balance between access to capital and investor protection. So we would, as we look at that file, we're thinking along those lines as well. So I think we are looking at that. I think a number of parties are, and you will see that develop in Canada to some level as well. If I can make one comment on an earlier question, you asked about follow-on financing for the more junior companies. We do track the stats on below 500 million market cap companies, the follow-on financing for them, TSX versus US markets, including NASDAQ, ASX, AIM, et cetera. And we quite regularly throughout the last number of years beat them handily. So on the follow-on financings for below 500 million in the tech space, and so we do track those stats. I want to just mention, I know that was not a question
So
posed.
crowdfunding, we didn't plan on talking about that, but it's an example of how some entrepreneurs think they're going to be able to raise money if the PMs are too stupid to give them money, then they're going to go to the quote crowd quote. I mean, it wasn't really available to you from a regulatory standpoint. It sounds like when you went out to raise capital, it's coming. One regulator calls it a bad idea, whose time has come.
Right.
I agree with that. But what do you think as an entrepreneur who's out there every day trying to build a better tomorrow? And can you see how crowdfunding could fit into your funding mix, even though you're now public, but turn the clock back to when you're private?
Sure. Would
that have been a good idea, or would you get 81 phone calls a week from people who are asking how things are going this week?
Right. Well, I think it's a broader question. So the question, and the gentleman to my left here have talked about, is that they're at the top end of the cycle, and they're deploying $20, $50, $80 million checks. And I think
also $2 million though. John will do $2 million, even a $500,000 deal. I think they have done. They've just moved. They've moved away from their original real estate.
We still do that. We did it 7 times. So no, it's the full gamut.
Right. 7
The
deals.
life cycle. It's the life cycle.
2 million under, you mean?
7 checks at 500,000
Wow.
out of 19. 7 checks between 2 million and 10 million, and 5 checks from 20 million and
Which
over.
got all the attention. Yeah.
Right.
Sorry.
Right, no problem.
Sorry.
So, I mean, I think that there's, it's just a sales problem. It's a funnel. We have to increase the bottom of the funnel. And we have to increase the bottom of the funnel by engaging angels to invest. So when John's company invests and provides secondaries to the founders of Hootsuite, they start reinvesting back into our ecosystem, which is great. I think
Which Vancouver's better at, frankly, than Ontario, I think, in many ways, historically.
Right. I think it's, that's how you start to build the ecosystem, how you start to fund and mentor the earlier stage entrepreneurs and founders. So you have that. I think that, the TSX venture is a route that people should explore as they're looking for alternative financing. The VC stack is simply not wide enough currently in Canada to accommodate the amount of volume of opportunities and volume of companies that are hitting that. So we call it a Series A crunch. I think
There's 2 probably VC firms that are in Vancouver, for example, that could do Series A, right? Yaletown and Vantage. Does that sound right? There isn't a third, I don't think.
I would say Boris's Works Version 1 Ventures
Okay.
probably is the one that's actually writing the most checks.
So 3.
Yeah. So I think we have to explore all alternatives. So get our angels writing more checks. Look at TSX Venture to provide opportunities of funding of the appropriate vehicles, and then equity crowdfunding. Equity crowdfunding is going to happen. As you said, a bad idea whose time has come. I don't agree with that sentiment. I think it is very interesting.
If you're an entrepreneur and you know your business and you trust your team, I get it. If you're an investor, I can't ignore Sanoforest and Brix and YBM and yada, yada, yada. There's just so many examples of public companies that are well regulated with big 4 accounting firms on top of them who've had problems. How 100 companies that are private who've raised money over the internet will have somehow an equal rare
Would you expect
occasion.
100% compliance? Like, do you expect?
It's not. No company with a back office of 1 person can have the same compliance as a firm that the TSX is monitoring with 30. But anyway.
Yeah, I think we have to go into it expecting that bad things are going to happen. But on the
But the problem with that was just like in the bubble in the NASDAQ bubble at 6,000, a bunch of Canadian investors went into technology, got singed, and then left the market for, I don't know, a decade. And they said, oh, why do I bother, right? Because they did. And the problem with an angel who actually isn't a professional angel, it's just an individual taking a punt, they don't have enough money to invest in 4 or 5 companies to be stratified with some good winners like Vision Critical and some losers like BioX that go to zero, right?
Right.
It's you don't have the capital to staying power to cover the waterfront.
Yep.
If you do 1 or 2 as a crowd investor, based upon the Parthenon of venture capital in 100 years in North America, you'll lose most of your money if you don't actually have the capacity to see 10 deals do 1, see 100 deals like John does and see 2,
So,
right?
but crowdfunding actually solves that problem. That's the problem that crowdfunding actually can solve.
If you're the entrepreneur, it helps. If you're the investor,
So if I'm an angel and I have $10,000 that I want to invest in early stage tech, which is
no, but angel by nature suggests you have an expertise in that space. The crowdfunding, I think, draws on the unwashed who don't have that expertise.
right, so I'll still use the same math. If I have $10,000 that I want to invest because I heard about technology and how good technology is, most issuers would only...
This is unplanned debate, by the way, I want you to know.
Most issuers would only give would only accept a $10,000 check. It's a small check size. But in the crowdfunding model, I can deploy $1,000 across 10 different companies and get a portfolio effect.
This is true. And you'll lose it all, by the way, but you can do it that way, too.
I do have... Go ahead.
I
In the words of Kenny Powers, I'm cutting in for a second because we watch this closely. I mean,
the
there's
service provider is now going to help us on why crowdfunding is okay and you won't lose money.
There was an announcement today by another organization that is developing a platform for secondary market trade. So I think it is important to distinguish between crowdfunding initiatives, which are being closely monitored, but to a less extent and less discussed in the Canadian context is a platform for secondary market trades for private entities like the Shares Post and Second Market.
With transparency to financials and whatnot.
Yeah, and I think it will
Well, that's a good
imply
idea.
a level of sophistication on the part of the purchasers, given, I think, transaction costs to participate in those sorts of things where very different from the crowdfunding risks that we're talking about.
We got 2 minutes left. Anything else the panel wants to discuss? Any more news you want to make, John?
That's great. I've said enough.
Anybody?
Just if I could, one other thing. When we talk about the successes and failures of companies listing on the public markets, I think it's key, and I think we're at a unique place and dynamic in terms of other growth sectors that are struggling right now. For technology, one of the risks what I think the TSX has done well in marketing, in North America and globally to list in Canada, and frankly, we've been involved in a number of those transactions. They've done a phenomenal job of marketing the exchange. The problem is some of the companies that have come and listed here, and for earlier stage companies, they don't raise sufficient capital at the outset, and they don't have sufficient following and evangelists among the dealer community and the investor community. And I think with the recent ramp up in both the sell side and the buy side in tech, you're getting a pull as opposed to just a push from the issuers. So I think we're at a unique spot where that confluence of factors can really aid and help out some of the newly listed, or what we hope are newly listed companies in that space, to try raise sufficient capital, have a follow-on to support it.
I couldn't agree more.
Yeah,
I think
I agree.
Canada in general, the companies across the board, John can see this, we raise too little money all the time. In our seed round, our A round, our B
Sure,
round.
our
we
average
raise
Canadian
too
VC round is $3 million. The U.S. is 6.3. I mean, right there is got half runway
Exactly.
out of the gate. Well, thanks everybody. Thanks to the audience for your time and to the panel for the interesting discussion.
Thanks.
Thank you.